Max Keiser, tell us what's front and center on your plate. We're going to come back and launch the official interview here. Max Keiser, syndicated radio host, TV host, maxkeiser.com. A one-stop shop for all things financial crystal ball gazing. Good to have you here with us.
Hey, Alex. Yeah, great to be with you. And just continuing on the theme that we established a few months ago, just trying to pick the exact date of when you have this global fiat money collapse. I've said April of next year is the outside chance of that happening anytime between now and then. And just to try to figure out where the seismic shocks are in the system, what'll trigger the event. So I'm looking at a couple of different things. And as I mentioned on the last show, I've done some more work looking into Japan. You know, Japan is a very interesting country because they funded 20 years of stagnant economic development with their savings account. So people in Japan are almost forced to buy Japanese government bonds. But now, demographically, these people are retiring, so they have to sell to fund their retirement. So that means a guarantee upward move in interest rates. That could be the trigger that starts a global cascading effect in the entire. What got me started on this is because it just emerged this past week, Alex, that the second biggest buyer of U.S. Treasury debt now is no longer China. Number one, of course, is America. America is the biggest buyer of its own debt. But taking the second spot now is Japan. China is walking away from the table. Japan has always been under the Treasury of America's thumb. They'll do whatever America says. And now they are the number two biggest buyer of U.S. Treasury bonds. But that is extremely dangerous because their economy itself is a tinderbox, probably the weakest, most fragile economy in the world after the Fukushima disaster, after 20 years of the zombie economy and the zombie banks. But now they are supporting America. Japan, the zombie economy, is supporting the American economy. To give you an idea of how fragile the system is. China is walking away. What is China buying with the money that they have? Well, it's turned out that they are buying gold. My sources tell me that China, before the end of this year, will come out with an official statement announcing that they've upped their gold by over 1,000 tons.
Stay there. We're going to come right back with all things economic. MaxKeiser.com joins us. He's also the inventor of the virtual trading system used by the Hollywood Stock Exchange. And he was on with us Sunday, and now things have really deteriorated. Fox News, AP, Reuters, they're all talking about global collapse. Banks prepared for collapse. Banks told prepare for collapse. We've been now told, and China has announced, the government's pulling out of the U.S. stock market, saying it's fraudulent. Just what Max has been saying. George Soros and others rushing in to buy gold, getting completely out of the market, even privately. They stopped managing people's money years ago. What does all of this signify? For those of us watching, the writing's on the wall. Massive war, total collapse. Can it be averted? Or, Max, when you say collapse on the outside by next April at the latest, are you saying that it will happen? Is there any way to avert it? What does the collapse look like? Max Keiser, you have the floor.
Yeah, I'm saying that it's a 90% chance of collapse by next April, but it could happen at any time between now and April. The global economy, you have to look at it in terms of the way a systems analyst would look at any complicated system. Every time you add more to the system, the complexity doesn't rise in a linear fashion, it rises exponentially. So every time the Fed puts on more quantitative easing, every time investment banks bail out some other investment bank, every time more derivatives are released into the system, you don't go from, let's say, 700 trillion in notional value derivatives to 800 trillion in a linear way. You have to think of it in terms of this global quadrillion to 2 quadrillion derivative souffle being encumbered with exponentially more risk. This is classic systems analysis because we no longer have an economy of supply and demand, of output, of factories, of wages. We've left that world 40 years ago when we went off the gold standard in 1971. By the way, this is the 41st anniversary of the closing of the gold window on August 15th, 1971 by Richard Nixon. But all this time since then, we've been building in the complexity, building in the debt. And so now, between now and April of next year, is my call, you're going to have complete systemic collapse, much worse than in 2008. 2008 was just a precursor to what will be a complete and utter breakdown. And just so the game here is to try to pick where it starts, what's the trigger, and to study it in terms of how the economies rattle and roll as a result of this complete and utter systemic breakdown. As I mentioned, Japan, to me, seems like the weakest link in the chain. Once that goes, it's one of the top 3 economies in the world, the second biggest creditor behind the U.S. itself, the U.S. debt, and they just have a lot of awful demographic and economic trends going against them. So looking more locally, Alex, to follow up on a story you've been talking about for a few weeks, the fraud that is Facebook, Groupon, and Zynga. I want to add something.
And you said on this show, let me just interrupt to give the number out, 800-259-9231, 800-259-9231. Calls coming up at the bottom of the hour. Max, I hate to toot your horn. I just want to point out, mainstream media gets it wrong most of the time beforehand because they're lying. They have an agenda. You keep getting it right, and our guests do, because it's, you know what's happening. But expanding on this, you said 6 months ago, well before this, you said Facebook was going to be a giant pump and dump. Everybody who knew what was going on knew that. And now they get away with this, but Martha Stewart goes to jail. Go ahead.
Right. It's a pump and dump scandal, and which is, you'd see on Wall Street 20 years ago on the penny stock firms. You know, they're very famous companies back then who were big in the penny stock, and they would call people up on the phone and get them to buy stock while they themselves were selling the stock. And then suddenly there were no more sellers and the stock would collapse and the insiders made out like bandits. Now, this is the first time we've seen it operated on this huge scale. Facebook was a $104 billion public offering. Barack Obama had his arm around Mark Zuckerberg. He was involved in this pump and dump. They go public at $104 billion, and they're now down 50% from the IPO price, 60 or 70% from the high just touched after the IPO price. And you've got 2 other stocks I want to talk about, Zynga and Groupon. Groupon is a stock that went public at 20, traded near 30, is now at 5. And Zynga is down 60 or 70, 80% as well. What all these 3 companies have in common, this is a dimension that hasn't been touched on a lot, is that they all share a common auditor, Ernst & Young. Ernst & Young is one of the biggest auditors in America. They are crooked. They are as crooked as Wall Street. They are as crooked as the fund managers. They are as crooked as the rating agencies. They are as crooked as these
And explain
bankers.
how this works. It's not just that they're crooked and cook the books. Only certain groups like Arthur Anderson and others who are politically connected with Justice Department people in a revolving door, only you go to them, not for them to cook the books even really. That's on the surface. It's really a payoff to regulators who are in a revolving door to let you be above the law.
Well, Arthur Anderson is one of the biggest accounting firms. They got caught up at Enron. Enron blew up, and Arthur Anderson disappeared. There were 10 or so big firms at one point. I think we're down to 4
But
now.
am I correct in what I said?
Ernst & Young is not necessarily hired to cook the books because the system is so corrupt that there is no genuine, generally accepted accounting principles worth anything anymore. Ernst & Young, they cover these 3 companies that I just mentioned. They've just lost, in total, these 3 companies alone, the market caps have dropped by $62 billion in the past just few months since going public. And just to give you an idea what Ernst & Young does, or these big accounting firms do, I had an experience myself when I was CEO of a company in Los Angeles. We had one of these big accounting firms come in, PricewaterhouseCoopers. And the trick is basically, it depends on what they call revenue. In the case of Zynga, that they sell virtual tractors, and they sell virtual raspberries as part of Farmville, which is a game on Facebook. Ernst & Young would count the virtual money as real money. So that was the fraud that they were committing. In the case of the company I was involved with, PricewaterhouseCoopers, they were identifying losses as revenue. We had $2 million in losses. They put in the filing for the IPO at Bear Stearns, $2 million in revenues. And according to their formula, that was the revenues of the company, even though they were the losses of the company. But they didn't get in trouble after that, because the accounting rules in America, just like all the banking rules and all the political rules and all the special interest rules and all the abrogation of all the civil rights and all the constitutional rules, are now in the hands of the lunatics running this asylum. They're the ones, Ernst & Young can say that losses equal revenues, and therefore the company is worth $100 billion. Then it goes to the public market, And within 3 months, we know, wait a minute,
Sure.
the company's not worth $5.
Sure, Max, stay there. When we come back, I want to get your take on this then. They're buying 1.4 billion bullets. They've got drones and checkpoints going up everywhere. And more they admit it's for a civil unrest collapse. Max Keiser, who's been stunningly accurate in his prediction so far, unfortunately, is saying in the next, I don't know, how far away is April? 3, 4, 5, 6, 7 months. 6, 7 months, he sees it all imploding. And now they're in Fox News saying it looks like the Fed is going to go to QE3. But they've already done other forms of stimulus that cause inflation. Max, what happens when the corruption is so systemic? I mean, if we had crashes in 1929, not much of the economy was tied up in the market. What happens when everything's tied up in fraud if things go belly up?
Well, it's a good point, because back in the 20s and 30s, you still had a very big farming component in the U.S. economy, and even during the Depression, there was enough family farms in America. People could eat to some degree. That's not so anymore. You have the big industrial farming, the Monsanto and farming, the huge conglomerate farming. You don't really have the small farms anymore. So when the thing blows up, there's no recourse. There's nowhere to go back. I'll make another prediction for 2013. You keep asking me, is there any way to stop it? And I say, no, there's no way to stop this, because systems analysis tells me that when you complicate a system to the degree that this has been compromised and complicated, there's a 99.9% probability of a total, utter systemic collapse before April, and that's my thought. Now, following up on that, there is only one possible outcome as a result of that, and that's civil war. There's got to be a civil war. It's going to be a civil war in America, intergenerational. All the people under 30 are going to go to war with everybody who's 45 plus, who basically stole all their money, stole their country, stole their wealth, destroyed the arability and the viability of the soil, and that will be the civil war. There's only, if you have one, you're going to have the other, and that would come in 2013.
Max, I'm so speechless. I've got to interject something here. This is shaking me right now, because I know you wouldn't just say this and put your credibility on the line. You're really sure of this, and I hope you're wrong. That's all I can say.
Well, I'm putting my flag, planting my flag on this one, as I have done before with predictions previously. And there's no avoiding the collapse. There's no remedy to the collapse. The underlying chaos is too great. The 86% of all the trades in the New York Stock Exchange are computer to computer. That's true of exchanges all over the world. The algorithms that support all this trading are funded with 0% interest rates from the Fed. They can borrow money at zero. They can do anything they want with any amount of money that they want. If they ever make a mistake, they get bailed out with more free money from the feds, and they keep adding layer and layer and layer of problems onto the system. We already had the flash crash in 2010. We had the entire evisceration of Knight Capital just a couple of weeks ago, 440 million in 45 minutes due to a spastic computer program.
Well, I mean, here's why you may be right. I mean, undoubtedly, it's all a giant fraud and waiting to blow up, Max. But why are the Chinese pulling out of the U.S. stock market?
They're buying gold. They're buying this is going to be another surprise announcement, Gallup. They're going to come out before the end of the year and say that their gold holdings are not at roughly 1,000 tons, but they're closer to 2,000 tons. They may even be up toward 3,000 tons, which would put them right up with Germany. Number 2 biggest concentration of gold in the world is Germany with 3,000 tons, and then the U.S. with 8,000 tons. China, big surprise announcement coming this year. They're either going to probably double their gold to 2,000 tons. It'll shock the world. It'll put a whole nother wave of buying pressure on gold, which we still see is going to continue its climb to $5,000, $6,000, $7,000 an ounce. And China is a big part of that. As you mentioned, Soros is now back in gold in a big way. John Paulson, one of the biggest hedge fund managers in the world, is now 44% of his fund is entirely in gold bullion. That's billions of dollars. The hedge funds, the smart money, is always the first mover, and they get in there first. They know what's coming. They see the collapse. A lot of other hedge funds are closing business because the system is too chaotic. There's too treacherous out there. Funds are just pulling the plug.
Well, yeah. Well, I mean, that's what the Chinese said. They said Monday, I mean, of course, you just mentioned it earlier, they said this system doesn't work. It's not real. In fact, I had the article. I forget their exact statement, but we'll try to find it during the break. But they were like, this system is no longer. We can't gauge this. They basically said it wasn't real. Exactly what you're saying, Max.
Yeah, I know. They listen to my show.
Well, they listen to reality, I'm sure, and they probably do listen to you. We'll be right back with Max Keiser and your phone calls. And he's got a lot